Hi guys, today we're talking about in property investing for time, freedom, choice and adventure. We all, as we get into property, we will have goals that we're looking to achieve, and many of the property investors that I talk to and have spoken to over the last 17 years, one of the big items on their list is travel. Who doesn't like to travel, see exotic places, meet amazing people? And if we get it right, property investing can fund this for us. So my guests today have done exactly this, and they're here to share exactly how they did it. So Jack, Charlotte, welcome to the recording, welcome to the call. Thanks for joining me.
Thank you.
Thanks for having us.
So we did an extended interview with you just a little while ago, which was all about this, investing for time, choice, freedom and money, because we all need money to pay the bills. Mm-hmm. And you had a really amazing story because you had a compelling reason why, which we all need. Sometimes you had a big goal that you were looking to achieve. You love adventure, travel, doing all those amazing things, seeing all those, going to all those amazing places. And today we're going to talk about how you did it and share that with everybody listening to this and watching this. So let's get started with life before property. What were you doing? I'm going to say way back then, but it wasn't that long ago at all. So
just a couple of years ago, I was a full-time physics teacher working down in London.
And I actually worked in property, but for one of the big corps, did like development appraisals and stuff like that, which was super interesting, got to travel, but obviously, we kind of had that goal of wanting to go away for a big block of time. We were kind of in that stage of life where everyone's kind of starting to get married and have kids, and we decided to go and spend all that money on doing an 8-month trip around South America instead.
Yeah, we thought maybe not that, and unfortunately 25 days annual leave doesn't quite pull us up to the big mark that we wanted to, so we made that leap, and scary leap, obviously, to move away from everything so that we could kind of go away and do this.
Okay, so you had started investing in property with this as an end goal, or you started investing in property at which point you realised, hey, this could actually fund a lifestyle?
Yeah, so we bought our first investment property back in 2019, literally just before COVID happened. And I think, to be honest, we just bought it because it was cheap and we thought it would be a good thing to do in terms of creating a little bit of wealth for ourselves and XYZ, why everyone kind of gets started. And then I think we started to realise, actually, we bought this I think we bought it for around 53,000, spent like 2-3,000, like all hands on deck, 2-3,000 refurb, bought in mums, dads, everything. And then we refinanced it at like 75 grand, which it's small numbers, but you're still building like 20k worth of equity into a property. And we were like, I think that flicked the switch. And it was earning like 500 quid of cash, because that's when interest rates were really low. So we were earning like 500 quid of cash flow a month off of it. And I think that really made us realise, actually, if we did this and put more effort into it, it could potentially, in the long run, generate an income for us that isn't just from a 9-to-5. So we did that one. And then a year later, we did 2 more, pretty much rinse and repeat of those. And then we moved to London. And hold our hands up, didn't really do anything for a good 2 years, just because we got sucked into the London bubble and it was great. And then we kind of had that, like I said, realization of, we need to get our head down now, because if we want this to be our long-term goal and income and everything, we need to really start pushing. And that's when we started to do kind of the bigger deals. We raised bigger chunks of investor finance, and started moving on to HMOs and setting out the goals of going away for that big travel and things like that.
Okay, so you're doing the single let, so kind of buy, add value, refinance, getting most of your money, all of your money back out on the refinance, and being left with the property with equity in it and cash flow from day one as soon as it's let. Yeah. And as you say, in London, getting caught up in the London bubble. And I'm guessing that the plan for property, you're living in London, but do you come to the realization that this is going to be difficult to get to work in London?
Yeah, exactly. So I think buying in London was never on the cards anyway, just because I think we had an awareness of the return on your money just isn't there. It's great to just hold money, and if I had a cool 10 mil just like bopping around and I didn't need to work too hard, then yeah, I'd chuck it into London, like no stress. But I think we always thought the opportunity was going to be further up north. We're from the Midlands initially, so we kind of have a good understanding of the areas there, and things just cropped up and it essentially led us down that route that we wanted to go. I think we started investing because we wanted to travel. That was always kind of the main aim for us, especially in the short term. Every single summer we were trying to go away for 5 weeks in between kind of uni holidays and things like that, save up our money for the year and then blow it all on that and work the rest of the summer to get it back. But the opportunities were always up north.
Okay, right. And so you set yourselves a goal, a financial goal of, this will kind of, I guess, financial freedom. This will cover the bills, and we're not going to have to work in the day jobs to do this. And at that point, I think it was about £5,000 a month, sort of. I'm going to say passive income because it's
not passive.
Yeah,
it's just false. Passive just doesn't exist.
Let's rephrase that then, of more passive than a 9 to 5 day job, if a 9 to 5 day job even exists anymore.
Yeah,
so.
Exactly. Yeah, so we set that goal actually prior to when we went away. So our kind of overarching goal was, right, if we can reach 5,000 per calendar month, then that can kind of sustain our lifestyle and we can still live and enjoy ourselves to a certain extent. I'm not saying it kind of covered the London lifestyle, and that's probably not going to be able to sustain 2 people in there. But the traveling idea came about when we took on 2 back-to-back semi-detached properties, and the idea was to flip one and rent the other. And that flip that we produced, all of the profits from that allowed us to go away and travel for those 9 months without us denting our property portfolio, without us taking any money out of the business, without us kind of drawing down on those funds. So we'd done a couple of flips before that, and we'd recycled the money. And I think a big part of our realization was you can always find another project. You can always reinvest that money. It can always work harder for you. But what's the point in doing all of this if you're not going to put it towards the things that you really wanted to do? And like Charlotte said, people are getting married, people are having kids, people are putting deposits down on their first or forever homes. And it's great saying that you have a portfolio, and it's great saying that you have all those things, but if it doesn't allow you to lead a life that you want, then what's the point in doing it? And we made and took that decision to put all the profits from that flip aside for us to go and travel and enjoy ourselves and allow the kind of more passive income just to sustain and grow in the business whilst we were still away. Okay,
great. So actually having this kind of mixed strategy of income generating properties that you're holding in the portfolio, adding in some flips to generate cash now to kind of fund the adventures as well. That sounds like it's a really important element to have both of those things happening.
Yeah, exactly. And there's also an element of, like Jack said, it reaffirms in your mind why you're doing all of it. Because I think we got to a point, maybe when we'd done like the 4th or 5th house, and we'd never taken any money, we'd never got ourselves a reward or whatever to say like, oh, well done for doing this. And we kind of got to the point of like, why are we doing this? And then we were like, right, well, let's just spend all of it on 8 months traveling and let's do that. But it's also important to generate those lump sums of cash because we work with a lot of investor funds. We raise a lot of finance for most of the projects. So not every project is always going to be all money out. So we kind of tend to do the flips to generate the lump sums, yes, to pay for some lifestyle aspects, but also to pay for the money that's left in the deal so that we know we're covered when it comes to paying investors back. We've kind of already thought about that, and we've got that strategy, we've got the money in place to pay them back. And then we can kind of split the money that accordingly in terms of like what we want to do and how much money we need to keep back for that.
Okay, and so the types of properties you're flipping compared to the types of properties you're keeping, are they very different types of projects?
Yeah, I think they have kind of changed as we've invested further. So at the very beginning, everything that we were holding was typically kind of like a 3-bed terraced house, and that would just be for cash flow. We could add the value easily, but because you're hovering around it's like 60, 70, £80,000 mark for a property, if you want to flip something, even if your numbers are off by 5,000, then that can really damage you on the back end. Whereas the stuff we're holding now are larger HMO conversions. So changing things from 3 to 5 beds. We're currently going through a 5-bed conversion right now, which that's what we're now looking to hold, which is higher cash flow. And we're kind of handing over our portfolio as we speak now to management so we can then work on just growing it further. And then the flip side of things, it's all about more kind of desirable locations and probably larger properties, maybe sort of semi-detached 3 or 4 beds where you're hovering up into the £200,000 marks and pushing them up to 3, because if you're buying for 2, spending 40, well, if you can get those higher values, it's easier. And if you do build in your contingency and maybe you're 5,000 off, well, 5,000 taking a chunk out of 3,000 versus 300,000, sorry, versus 5,000 taking a chunk out of 50,000 is a much bigger margin or percentage. So the strategies are starting to change, and I think it's just like the Monopoly board. You just kind of go up and up and up a little bit, and we've been very fortunate to do that because of the experiences we've had. But yeah, the system in place now is just kind of working. The flips are for growth, and maybe in the next 2 or 3, a pot will be put aside to go away on our next trip. But we're kind of in a graft and work stage at the minute. Like I said to you earlier, we've got 12 months where we're putting our heads down, a few little trips in between, but no massive 9-month travels, unfortunately.
Yeah. Okay. Grow the portfolio, get another couple of flips or a few flips under the belt.
Exactly.
Build a cash pot, and then choose. Have that choice to see what you want to do with it. So, okay. So let's talk about the project where you had the 2 properties, the back-to-back properties, one of which you were you kept, one of which you flipped on. Can you tell us a little bit about that?
Yeah, of course. So yeah, like you said, there were 2 back-to-back. I think they were previously owned by a charity or a social housing organisation, and they just needed to get rid of them super quickly. So I think they were both on the market for 165, and we lowballed at 125 per property, and we got the call, and they were like, "Yeah, they're yours." So already you're getting them like 80 grand below what we should have bought them for, right? And yeah, refurb them, and then we ended up selling. Refurbs were about 40,000 per house. Needed full damp proof, replaster, new kitchen, new bathrooms, everything. And then yeah, we literally completed on one a few months ago. So we sold that off at just above 200,000. Made a good chunk of profit on that. And then the other one, we've refinanced a little bit higher, and then we're renting that out.
And that's rented as an HMO, or
no? That's just rented as a single let. And the reason to do, as they're like back to back and they're on the same road, if we were to put them both on the market at the same time, you flood the market. So the tactic is just sell one off, keep that one rented for a while, and then we'll sell that as well eventually. But it's quite nice because it's holding equity. It's a good little earner. We have no issues with the tenants. So yeah, they were great.
Okay, great. And the flip one, what did that deliver in terms of the sort of profit after all the costs and everything?
After all the costs, I think it was just over 30 with tax and things like that. So kind of our criteria is any flip that we do, we're looking to have over a £30,000 profit when you take in all costs and taxes and things. So yeah, it's still provided on that, and we're hoping the next one will do the same. But obviously we've got larger holding costs and things like that with that now. But yeah, I think the opportunity just came about because they'd been on the market for a period of time. One had nearly sold and then not, and the other one had nearly sold and then not. And then we came in with an offer to take both off the market for them, and we were fortunate enough to.
Yeah, and it was quite good because they owned both, and I think they had different amount of debts on both. So we said, look, our combined offer's 240 grand. Split it as you want across the 2 properties in order to hit the debt on the 2 different ones that you have. So I think that kind of it solved a problem for them, and it meant that we got the properties way cheaper than we were ever expecting.
Okay, amazing. And is this the one that sort of funded the adventure, or
no?
The one before that.
Okay,
the one before that. Funded the adventure, so that was another semi-detached property in a place called Shrewsbury that we were actually both born in, and it was just very, very tired old property. A hoarder had lived in there for a long period of time, and they were moving out. But it was your very typical, didn't smell great, didn't
Yeah.
look great.
Don't think he ever took his dog outside type now.
It
Yeah.
was a fantastic opportunity for us, and I think it was just a bit too much work for someone maybe moving in for their own home, and maybe not quite big enough for a larger investor to take on. So we again took it all on, managed everything ourselves, brought in all of our old trades and things like that, and they did an incredible job. And then we kind of pushed it on the back end. But once that had completed, all the profits from that funded the trip, and then everything else that came back went into the twin semi-detached. So they were all working whilst we were away.
And that's something else that we've changed as well in terms of trying to automate as much of the business as possible. Because obviously, when you're away and traveling, it's harder to keep a track of everything that's on the ground. So with that one, we managed all of the trades ourselves. Whereas with these now, with the HMOs, we're getting a contractor in who will oversee all of it. So what we have one point of contact, which when we're away or we're not on site that much, is super helpful instead of having to try and coordinate so many different people. And that's something that we've learned through doing all the different projects, that actually it might cost a bit more, but in terms of time saved and stress, it's actually so much easier to just sometimes get someone to do all of it.
So let's talk about being away, and so where did you go first of all? Let's talk about where did you go and what did you do?
Yeah, so it was we'd always been attracted to South America. I think since we first got together, we'd done a bit of Southeast Asia, we'd moved in Indonesia,
did Central America.
We'd done Central America, which kind of like really started to get us interested. We've done traveling separately, extensively in kind of New Zealand and Australia, but we wanted to do a big South America trip, and it's such a big continent that we didn't want to kind of fly over for one country, fly back, and then do all of this. So we thought, well, let's just do it all at once. So the plan was, and what we completed, started in Colombia, and then we kind of like fish hooked all the way down. So I've got to remember now, Colombia, Ecuador, Peru, Bolivia, Chile, Argentina, Paraguay, Uruguay, Brazil. But we can't really claim Brazil because we were only there for a couple of weeks, and we just like...
We only had one day in Paraguay.
We only had one day in Paraguay as well. But
it counts.
But we hit it all, and it was just the most incredible trip. If anyone gets the opportunity to go to those countries, the people, the culture, the food, the beautiful landscapes, everything was amazing. And I think everyone comes with this thought of, South America, or we spoke with our parents, they went, really? And that reputation just couldn't be less true.
Yeah.
The people were so friendly. Now, don't get me wrong, there is going to be trouble there if you really want to go out and find it. But if you are sensible and you have your head switched on, nothing comes to it. And it was just fantastic.
It was just like, you go from like drinking margaritas on the Caribbean coast in Colombia to like iguanas and swimming with giant manta rays in the Galapagos, to hiking up Machu Picchu, to going to like Patagonia, more hiking. Then you're on a beach in Rio de Janeiro, and it's just like the most eclectic, cool continent ever.
Yeah, it's really got everything.
Okay, and it sounds like an amazing trip, and who wouldn't want to do that? But let's talk about what happens with the property business while you're away. So I'm assuming the flips kind of go on hold at that point, but you've still got the tenanted properties, unless you are still managing flips from X thousand miles away. I don't know.
Yeah, so kind of a little bit of both. So we didn't do any flips whilst we were away. Everything still ran smoothly in the background. We've got teams in place. We'd set our builders up in direct contact with all of our tenants. So they essentially reach out to our maintenance teams, and under a certain amount, they don't need to contact us, or we've got a good relationship with them and they're very aware of what they should be contacting and what they wouldn't need to contact. Boiler breaks, roof breaks, thankfully nothing that happened, but they would be on the phone. Whereas small little changes, or changing a lock, a window, or anything minor like that, our teams just took care of it, and it was absolutely fantastic. I think we didn't do any flips, but we did complete on a property purchase from South America, which was really cool. And in all honesty, don't do it. It is so difficult because everyone wants a wet signature. everyone wants you to be on camera.
Get ready to befriend random people in a hostel lobby to ask them to come and witness the signature in your hotel, in your hostel room and stuff. And then DPD it across the Atlantic.
And that is wildly difficult, because trying to communicate to someone, often in broken Spanish, of no, it's nothing to do with you. It's just, I need you to stand here to say that I did what I did, and you need to sign to say that you saw I did what I did. And my Spanish is poor anyway, so that was really tough. But we were super proud that we got it over the line. And we didn't view the property. Our builder went to see it. They quoted it up. We ran the due diligence ourselves, called the agent, we offered, we put it all through with solicitors. Lending pool was difficult, but I think there's always going to be a reason not to go away. And if you really look hard enough, anything can be difficult enough. But also there are solutions for everything as well. You've just got to overcome and adapt it. And I think we did a really good job.
And it also meant that we landed back beginning of May, and we completed on it, I think, about a month before. So it meant that when we got back, we could literally, the builders were already in, hit the ground running with it. Whereas if we'd kind of not done anything whilst we were away, it then would have taken like another 6 months to buy something, and we wouldn't have been cracking on something until like September. So it gave us that ability of, it didn't put the business on hold. It probably went a bit slower than it would have been, because like since we've been back, we've done loads, but it still meant that stuff was happening and that we could hit the ground running when we got back.
Yeah.
Okay, so now you guys are back, and you're back for a little while now. So what's the plan with the business now in terms of growing the portfolio or more flips, or what's your next sort of 12-month plan look like?
Yeah, so we literally sat down, a couple of weeks ago, and did our Q3 targets. So we hit our target whilst we were away of our cash flow of 5,000. So that was incredible. So we've now doubled that. So by the end of this year, we're looking for 10,000, and that's coming from a variety of things. I think a large flip is going to be within the next quarter alongside another HMO. So we've currently got 2 that are going through, as we mentioned, but that's going to be the kind of immediate goals. In the longer term, I think we're going to look to take on bigger projects. I know that you mentioned about developments and large kind of resi conversions. We'd like to explore those options, definitely. I think we've probably got 2 more projects to get under our belts before we jump up to that stage, but HMOs are now feeling comfortable. Flips obviously feel very comfortable at the level we're at. But I think the exciting thing that's taking our time at the minute is we've launched a community to help people kind of do what we do and support them and kind of act as mentors in a way. So we're currently helping a lot of people to move themselves forward and travel if they want to, or put their time into what they want to do.
And from the people that you meet and support, and other investors that you work, is travel quite high on the priority for a lot of people?
Yeah, I would say so. Like a few of our mentees are, like, one of them wants to move to Spain next year. One of them like is just about to kind of hand in his notice because he wants to just create that life of freedom. Like he's away this week, and he was like, oh, it's just so nice to think like once I'm full time, like this can be my life. And I can work in the mornings and go out and do stuff in the afternoons. And I think that's where people have resonated with us when they've seen us on like our socials and stuff, when we were sharing stuff when we were away. And it's like, I think people resonate with the life that we've aspired to create for ourselves. And we get messages like on a daily basis from people just kind of saying like, so cool, like we'd love to create like what you guys have created. And that's why we've started this community to kind of help people do that. And I think like in the beginning, you are clueless, and you just need people to ask questions to and kind of bounce ideas off, and it's just creating that kind of support network for people. And it's a nice thing because yes, property is great and it creates the cash flow and it creates the lifestyle and stuff, but it's also really nice kind of being able to help people. And I think with Jack's especially like teacher background as well, it's an exciting time for us for sure.
Yeah. And so kind of finally, I suppose, how have you found the kind of switch from sort of very structured jobs, the 9-to-5 corporate career, also was working as a teacher? They're pretty kind of rigid environments. How have you adapted to kind of like, it's suddenly my time's my own and I have to just kind of like focus on hitting my goals? Did it feel weird when you kind of walked out of the day jobs?
Yeah, it was wild at first because obviously we handed our notices in. We then went away for 9 months, and felt like a holiday for 2, and then you were kind of thinking, no, this is actually our life now, so we do need to put some time aside. So we started to build the routines. The biggest shock came when we came back to the UK of, right, we don't have an excuse now of, wow, that's a really cool sea turtle, I'm just going to stare at that for the next hour. And actually, we did find it difficult, and we never found it difficult to motivate ourselves to do things, but just to hold yourself account of, right, well, this is what I'm setting out to do this week, and I really need to push myself and do it. And we're just trying to build in a structure that works for us. We still haven't really found that yet. So we are adopting just fairly strict times, blocking out our time of what we want to do. And when the opportunities come up of us socializing or going exploring or taking a weekend somewhere or midweek somewhere, we just block that out and then work around it. I think that's the whole point of the flexibility, isn't it? A lot of people come out of a 9 to 5 and then work even more in their business. And don't get me wrong, we're working in our business right now rather than on it, but we're trying to put things in place so that that kind of flips on its head.
Yeah. And I think it takes things like time blocking, and I think it is just the discipline. Like, it's quite funny when we got back and everyone was like, oh, well, you're not working, so let's do this. And it's like, well, no, we are working. We're just working for ourselves. And that's also a mind shift, because it's like justifying that. You always feel like you have to justify to other people, because if it's like, oh, it's just my day job, people get that. But if it's like, oh no, I'm working on my own business, sometimes it's harder to explain that. But yeah, the time blocking has really helped, and it's just kind of treating it as a 9 to 5. Like, we will get up and we'll go to the gym, and you build in that routine. And yes, if you want to take a Wednesday afternoon off, you take a Wednesday afternoon off. But whilst we're back and we're in this growth phase and we're really like focused on our goals, and I think that's another thing, having crystal clear goals. So yes, we've set our Q3 targets, but we also have our own mentor that we work with, and that's super helpful for us, that we sit down with him once a week. What we meant to do last week? Did we do it? If not, why the hell didn't you do it? And what are you doing next week? And it holds us accountable. So yes, we've got each other to hold each other accountable, but also with a mentor has been really helpful in like pushing ourselves forwards, especially when structure hasn't always been there.
Yeah, and those goals without the kind of action list and the accountability are kind of just wishes, aren't they? Without
I think they can be a bit overwhelming, because you say, okay, 10k cash flow by the end of the year. It's like, how the hell do we get there?
What does that look like?
Let's actually break it down into what can we do today or this week to make that a reality. But let's not think about that massive overarching goal. Let's think like,
what can be done today?
Actionable points.
What can you do in the next half?
And so obviously you're partway there to this 10k goal. How will you bridge the gap? What will that look like in terms of the types of properties, or what's the plan to get that next bit, to hit that next goal?
Yeah, so it's going to be a combination of larger flips. So we'll be taking on a lot more investor finance. We typically work with investors over kind of a fixed term and offer them a fixed return on their investment, but that obviously needs to go back to them at some point. So flips go in, and if we can JV, that's great. That sets aside the pots of cash that then can be left into larger developments like HMOs, like HMO conversions. So over the next, I'd say, 3 properties that we'll hold in our portfolio, there'll be larger HMOs, or we'd like to explore serviced accommodation options, particularly because we've just moved to Manchester, so there's kind of a large opportunity here.
I think essentially now moving forwards, HMO wise, we did have the threshold of £1,000 cash flow from a HMO. I think we probably bumped that up for the next few to 1.5 minimum, which is what the 5-bed is that we're doing at the moment. And then scale the mentoring side, the community side of the business as well. But yeah, a big focus on HMOs, and maybe getting kind of some social housing leases on them, and service accommodation.
Okay, fab. Well, it actually sounds like you're quite a long way towards that next goal already. So, maybe it doesn't feel it, but it does sound like you are further along there than maybe you think you are at the moment.
Mentally.
Mentally, maybe not physically, but mentally,
yeah. Okay, well, look, guys, thanks so much for jumping on to the recording today to share with our community, anybody watching this or listening to this. If you are and you want to read Jack and Charlotte's full article, Jack and Charlotte's full article, then just go to yourpropertynetwork.co.uk. You can join, you can take out the free trial membership there. Their article is there ready for you to download on the membership site. It's there in the magazine. And along with thousands of others, thousands of ordinary people achieving extraordinary things in property, like this. I say ordinary, but you are an extraordinary couple, like doing amazing things. So thank you for joining me on this. It's been an absolute pleasure. We couldn't do what we do without people like yourselves sharing your real life stories of what it's actually like in the trenches, property investing, and traveling and living that life of adventure.
Yeah.
Thank you.
Thank you so much for having us.
Yeah, thank you so much for having us, and appreciate you kind of putting us up here, going through the interviews. It's been amazing, and I hope we can help anyone. If anyone needs anything, then hopefully this has helped you. But really appreciate the opportunity. So thank you so much.
And if you're thinking about taking that leap and going on a big travel, and just do it. You'll never regret it.
For sure.
Yeah. There we go. What a great note to end on. If you're thinking about it, just do it. But do it with a plan. Have a plan.
Calculated, just do it.
Absolutely. Thank you, guys.